Humanity has discovered fire, electricity, and the wheel, and with Bitcoin we can add absolute scarcity to that list too. This is part 1 of a special 3-part series with Vijay Boyapati, the author of the Bullish Case for Bitcoin. We look at why Bitcoin isn't just some new app or yet another technological product, but a fundamental discovery in human history that can never be repeated again. We're breaking down the physics of money and why your understanding of value is about to change forever. And wait until you hear Vijay's take on why every competitor to Bitcoin is mathematically destined to fail and how Bitcoin is laying the foundation for how a $1 trillion asset monetizes from scratch. If you were enjoying my content, it would mean a lot to me if you could subscribe to the channel and like my video to support my journey. Thanks a lot. Now let's dive in to part 1 of this series. Vijay Boyapati, welcome back to Bitcoin for Millennials.
Thanks for having me, Bram. I'm really excited to do this with you.
Yeah, I'm happy you were up for doing this series. We're going to do a 3-part series. Your last episode was really well received, over 25,000 views. So I was very happy with that. And then, I proposed to you, let's dive deeper into the bullish case for Bitcoin, but today. So kind of like unpack it, go to the core, and then kind of place it in, where we are at today and seeing if it still holds up, but also kind of like paint a picture of where we can go. So this is part 1. And in part 1, I really wanted to talk about this discovery of absolute scarcity. So like, what are the core properties that make Bitcoin something that is very unique? And I think also something that, a lot of people don't understand that this is a one-time only event. Basically, people still compare it to, NASDAQ or stocks or, whatever other commodities. So I thought it would be a good way to kind of like start at the discovery versus invention. And it's also because you said that, Bitcoin is more like a discovery of a new element, basically, rather than a new software app or some technology platform. But for people that, really grew up in an kind of like an age of new tech coming and going, right? Like especially millennials, we've seen a lot of stuff come and a lot of stuff go every, let's say, 18, 24 months. Why is it so important to understand that, it's kind of like mathematically impossible for us to discover absolute digital scarcity, which is Bitcoin, a second time? Like, why is Bitcoin so unique in that regard?
That's a deep question. I mean, I think I would want to start one step back, which is, why is scarcity important? Why do we care about it at all? And I think you have to ask the question about, why do humans value money? Money itself has always been chosen by humans as something that has no real other use. Shells and beads are not really useful. Metals are not really useful for anything else. But they serve this incredibly fundamental role in modern civilization in allowing trade between distant people and the division of labor in a modern society where people can specialize in, one person's a baker and one person's a butcher and one person's a candlestick maker. And without money, we cannot have that. And one of the most foundational properties that money needs to have to be chosen as money is scarcity. Because if you were to choose something that was not scarce as money, if you were to choose sand, then everyone would go down to the beach, they would produce more money, and then no one would value it. No one would want to hold it. No one would want to use it in exchange. So scarcity is probably the most fundamental property of money. And we need money to have a division of labor and to have a modern society as we know it now. If we did not have money, then we'd all be living in, adobe huts, only trading with people in our very close family or in our village, and we'd all be much, much poorer. So to get to Bitcoin, there is this interesting question of digital scarcity, and is it possible to have digital scarcity? And for a long time, most people thought it was impossible. Like, you create a cool image on the internet, anyone can copy it and send it around. And so people really struggle with the concept of, is it possible to create a digital money that's not controlled by someone? Of course, you can try to create scarcity if you say, or if I say, hey, I'm creating VJ dollars or Bram bucks, and you say there's only 100,000 of these, but then the person has to trust you, or they have to trust me with this new form of money, and trust that when I say it's fixed in supply, it definitely is fixed. But there's a very strong incentive if I was to create my own money and people start adopting it and using it for commerce. Why don't I create more of that? I could easily create more of that and then give myself a lot of financial power. The incentive to print and create money is enormous. And this is an incentive that has existed every time money was created by any institution. And in Europe, the French went through this in the 18th century when John Law spoke to the king and said, hey, I can create new money, paper money, and it will give you a lot of power. And then what happened was he just created more and more money, and it made the sovereign feel really good, but it impoverished the country because it created enormous inflation. So there were a group of people who were really interested in this question: is it possible to create digital scarcity? And these people were known as the cypherpunks in the 90s, and they were a very freedom-oriented community who were motivated by the potential of the internet. The internet was blossoming in the 90s, and they were really motivated by the idea of unfettered communication between anyone on Earth, that no one could stop me and you talking to each other. And one form of communication is the transmission of value, the transmission of money. And so they were very interested in, is it possible to create a form of scarcity, a scarce form of money that's digital, that we can use on the internet, that's native to the internet? And they spent many years trying to do this, and many attempts at creating digital scarcity. And some of the brightest cypherpunks at the time attempted this. There was Adam Back with Hashcash. There was this system called eGold, which was another one. Hal Finney had his own system. And all of these systems fell short. None of them really figured out a solution that would allow scarcity to exist in the digital world. And by the early 2000s, most of the people in this community had given up on this vision of digital scarcity and thought, actually, this is probably impossible to have a system of money that's not controlled by anyone, but allows for scarcity in the online world. And then in 2008, during the global financial crisis, an unknown figure published a paper to the cypherpunk mailing list. All these people who had tried to create digital scarcity and online money, but had not succeeded. This anonymous figure who went by Satoshi Nakamoto said, I have a solution. And he published his paper to this group. And any of the people who were paying attention, many of them didn't even pay attention. Is it someone who had never posted to the list before? Those who did pay attention mostly dismissed this idea and thought, we've tried this before. We tried this a decade ago and no one could solve it. But there was one person, Hal Finney, who had tried numerous times to create digital money, who read this paper and was fascinated and thought maybe it is possible. And then 3 months later, Satoshi Nakamoto launched the Bitcoin network and solved a long-standing problem in computer science known as the Byzantine generals problem, which many of these people on the cypherpunk mailing list thought was impossible to solve. And he created Bitcoin. He created a system that allows for digital scarcity online and forms the basis for a new monetary system.
When it comes to holding Bitcoin securely, peace of mind starts with architecture. On-ramp's multi-institution custody model distributes control access across 3 independent regulated key holders in a 2 of 3 multi-sig quorum. No single point of failure, no pooled or omnibus exposure, just segregated client-titled vaults. You retain full legal ownership while on-ramp coordinates security, compliance, and operational workflows behind the scenes. Multi-institution custody is the foundation for everything that on-ramp builds. Sound infrastructure that distributes counterparty risk and provides fault-tolerant resilience with clear audits and institutional controls. And now on-ramp is piloting flat, predictable pricing to make best-in-class Bitcoin custody and financial products more accessible than ever. Visit onrampbitcoin.com to learn more and sign up with code BRAM, that's BRAM, to receive $150 in Bitcoin after your first deposit. On-ramp, strength in many, simplicity in one.
The thing that makes it special, I think, is the circumstances around which this system was created. It was during the great financial crisis. Satoshi Nakamoto was kind of motivated by governments debasing their money and destroying money and creating these huge kind of economic cycles and booms and busts. And he wanted to get back to a world in which people could be sovereign and control their own money and their own savings, which we had under the gold standard a century earlier. And so he created Bitcoin, and he did it in this special set of circumstances during the global financial crisis. And he published it, and it was completely open. Anyone could look at how he did it, and he created an open protocol with open source software. Anyone could inspect the software and look at it and see, was he doing what he said he was doing? Does the software match the paper that he wrote? Does the system work in the way he says it works? Everyone can look at the Bitcoin code. And anyone could join the network. It was an open, permissionless network. Anyone with a computer and a connection to the internet could join this system. And it was the birth of something completely new in the world, which is a system that he designed it in a way that allowed for ultimate scarcity. He created a system in which the total supply of this new form of money was strictly capped at 21 million Bitcoin. And this is something that's never been seen in the world. Human societies have never seen anything that had absolute scarcity. Even in the gold standard, gold is hard to produce. You have to mine it. It's very costly. But the supply of gold goes up every year by a few percent per year. But Nakamoto discovered a way to create this set of beautifully balanced economic incentives that made his protocol work so that there would only be a finite and fixed number of Bitcoins ever produced. And so this is something totally new in the world. There have been a lot of copycats of Bitcoin that claim to do the same thing, to claim to be scarce. But the problem is, they don't have that kind of immaculate conception that Bitcoin had. The immaculate conception of being created in this environment of the global financial crisis, being motivated by a sense of freedom in giving people sovereignty over their own savings and their own money. And they don't have the trust of the population of people who use the network, that this was created with pure intentions, that anyone who wants to use the network can jump in and it's permissionless. They're created by specific groups of people to enrich themselves, which is a very different thing. It's kind of the difference of someone finding an element that could benefit all of humanity because it allows us to create a tool that's beneficial to everyone, versus someone who creates a cheap gold-plated version of that tool which looks shiny and looks good, but the only real purpose isn't to enrich the person who created the copycat. So Bitcoin is special in that those circumstances which existed in which it was created will never be replicated. It had a founder who created Bitcoin and sort of birthed it into the public and said, now this is yours, and who then disappeared. And so has no control over Bitcoin. Bitcoin is now something that exists, and no one particular person or group can control it. And that's really the core difference, that you cannot replicate Bitcoin. You cannot create a copycat of Bitcoin where it has all of those foundational properties, and which is not controlled by a small group of people.
But if we look back at the beginning, right? And I think you talked about it before, like why did the world need to be like blind to Bitcoin in the beginning for it to survive, right? Like if Google or a central bank had invented this, do you think it would have already failed? Like, why is it so important that it was kind of like obscure and tiny, and you know, even Satoshi in the beginning messaged with Julian Assange of WikiLeaks, like, please don't use Bitcoin. It's too much attention for the age of the network. Like, how do you think through that?
Yeah, no, that's a great question. No one's asked me that question before, and I think it's the fragility of the system in its earliest days. You can think of it kind of like a fragile sapling, like a small tree. It's most susceptible to the wind and to being knocked over by, you know, an errant animal. But when its roots are really planted and it has grown some size, it becomes very, very powerful. And what that is the network effect. And that's what you're sort of talking about. For any good or service that's in a market with a network effect, the network effect is itself the most important property to the success of that product. And what I mean by that is you could have two products, A and B, and A is actually inferior to B. Someone comes along with a new product, B, which is superior to the existing product, but because A has a network effect, it's very hard to unseat it. And an example of this is, you know, in the 90s, Microsoft controlled the operating system market with Microsoft Windows, and actually there were quite a few competitors that were, just from the perspective of like the engineering the product of an operating system, they were superior to Microsoft. But because it had such a dominant network effect, people wanted to buy it because that's where all of the applications were built. And all the application developers wanted to build on it because that's where all the people were. And it was this kind of self-reinforcing two-sided market. And the same thing is true for money as well. Money is an economic good with a very, very powerful network effect. The only way to unseat an economic good which has a network effect is you cannot just be a little bit superior. You have to be massively superior, to have a massive comparative advantage. You need to be able to do something which is completely different that the original thing just cannot do. Gold is a great money, and for a long time had a very powerful network effect because it was the dominant money. Everyone used it, and everyone wanted to use it because everyone else was using it. But gold has this problem, this big problem of transmissibility. Like, you sit in the Netherlands, I sit in Seattle. How do you transfer value through gold to me? It's a very difficult thing. And in our modern world, that's actually a very important problem. We live in a global economy and we want to be able to transact with people all over the world. So Bitcoin needed that. It needed some massive comparative advantage against the other forms of money that it was competing against to overcome the network effects of those. And it does. Against gold, Bitcoin is like gold with teleportation built in. It has all the great properties of gold, but I can teleport it instantly. And it has a huge comparative advantage against fiat monies, which do have the ability to be transmitted digitally, but you have no confidence in their scarcity, because fiat currencies have had a long history of being printed continuously to the point of being debased into worthlessness. So Bitcoin has massive comparative advantages against its closest cousins in this market of global money. And so it starts getting usage because of that. Because at the margin, you can do stuff with Bitcoin you can't do with these other monies. And then as it gets more and more usage, it starts to build its own network effect, because other people come along and say, I want to compete with Bitcoin. I'm going to create, better Bitcoin or Litecoin or Ethereum. But the problem is these other competing forms of money don't have that dominant network effect in this realm of digital currencies. And whatever supposed advantages their creators say they have, they're only very small, insignificant advantages. Like Litecoin has a slightly faster block time. That is not enough to overcome the dominant network effect that Bitcoin has. And this network effect, as you say, it has this Lindy aspect to it. The longer it exists, the more people trust it. Bitcoin's been around a long time, so I trust it even more. And for money, that's a particularly important thing. When you save, keep the proceeds of your labor in money, you want to know that it's going to hold its value through time. So the Lindy effect is very, very important. The longer money exists, the more you're going to trust it. And this feeds into the network effect as well. The other things that feed into the network effect are things like brand. Like every time anyone mentions any digital currency, they always mention it in contrast to Bitcoin. So Bitcoin's always brought up. So there's a brand network effect. There's a developer network effect. There's the fact that, the best developers in the world, the best cryptographers want to work on the most significant project. And Bitcoin is obviously known as the most significant digital currency. It's a thing that you want to work on because it has global significance. And there's the network effect of just the hardware that's put into Bitcoin, the mining hardware. You want to mine the coin, which is, already the most secure network, and which is when you get a reward, a mining reward, that value will continue into the future. Like you don't want to mine a coin that might disappear tomorrow, for instance. And then there's the liquidity network effect, the fact that, it has got such a deep base of users now and is so integrated into the global financial system that it has so much liquidity. If you are a big hedge fund, or you're a sovereign wealth fund, or you're a nation state, you want to put your savings, if you're going to do this, into a digital currency which has the most liquidity. Because if you put it into a currency which has no liquidity, you're going to move the price a lot, right? It's very hard. A nation state couldn't go out and buy like $1 billion of Litecoin. It just wouldn't be possible. The price would skyrocket, and then they wouldn't get the price they think they were buying at. Whereas Bitcoin is deeply liquid enough that large buyers can come in and buy it without moving the price very much. So the network effect encompasses all of these different things, and that is something that cannot be replicated either. You create a new coin that says it has some properties are better than Bitcoin, you're not going to be able to replicate all of those network effect attributes that Bitcoin has. And like you said, you gave some examples, but one I like to think about is like Facebook, the dominant social network. I could create Vijay Book and it could have a few bells and whistles that Facebook has, but no one's on it, and no one wants to go there because no one else is on it. So it's very hard to overcome a network effect when it exists.
How do we explain to a skeptic that now that Bitcoin exists and it's objectively superior in its characteristics to anything else that has existed before, and not everyone understands that at the same time, right? And we denominate Bitcoin in a price, but I would say rather exchange rate, right, in fiat currencies. And these fiat currencies go up and down, and the understanding of Bitcoin goes up and down. And I think, combined, there's this volatility. But a lot of people talk about, this is a new asset being born, or they say the word monetization. Can you kind of unpack how people could look at kind of like the time we are in now? Also because Bitcoin is 17 years old and it hasn't become blah, blah, blah. Like, how can people understand this phase, and how much should they kind of like zoom out to see it in a perspective that you think would do more justice to it?
Yeah, I addressed this question in the Bullish Case for Bitcoin primarily because there was a big debate in the Bitcoin community in, say, 2014 to 2017 about what is money, what is the primary role of money, and there is one school of thought that money is primarily defined as a medium of exchange. And actually, a lot of textbooks will define money in that way. And so a lot of people in the Bitcoin community had this idea that, well, if Bitcoin's not used as a medium of exchange, then it's a failure and it's going to die. So we need to go out and we need to convince a bunch of people to accept it in exchange. We need to go to a bunch of stores and tell them they need to start accepting Bitcoin. And all of these attempts failed. But it was very difficult to convince anyone to accept Bitcoin at, say, a grocery store or a coffee shop. And the primary reason for that was that these stores didn't have any customers who owned Bitcoin. And so the mental overhead of accepting Bitcoin and creating a payment system and figuring out how to do all this was way higher than the actual value that they would get from people who were Bitcoiners buying stuff from these stores. And what I wanted to explain was that money does not emerge in this way. It does not suddenly become a medium of exchange. This is completely ahistorical. And there was an economist, a famous 19th century economist, one of the fathers of marginalist economics, William Stanley Jevons, who explained the emergence of money. And he said money emerges in 4 stages. First, as a collectible. It's something that people value simply for its own sake. And for example, gold was valued simply because it was a shiny rock. Someone picked it up from a riverbed and it was shiny and it didn't tarnish and it was hard to destroy. And they valued it simply because of that. Not because you could do anything with it. You couldn't eat it. And when it was first discovered, probably no one really valued it for anything. You couldn't trade it for anything. It was valued for its own sake. So that's the collectible stage of money. The second stage is a store of value stage, which is people recognize that other people seem to value this thing for its own sake. And they realize, well, maybe I should keep some of it. I should keep some of it just because I know other people value it. And then maybe I can do some trading with it later on. I can keep some value in this thing which holds value over time simply because other people value it. And when it becomes deeply established as a store of value, that is when a lot of people recognize, hey, this is a valuable thing. I might want to have some of it because I know other people value it. Then it can transition to what people in the modern world think of as money, which is a medium of exchange, which is you could go to someone and say, hey, I know you value this thing. How much of it do you want for me to, for you to trade that loaf of bread that you just made? Then it starts transitioning into becoming a medium of exchange. And then when it's widely used as a medium of exchange, when people are exchanging things for this new good, it can transition into the final stage of money, which is becoming a unit of account. And what it means to be a unit of account is everyone thinks in terms of that money. They start measuring value in terms of that economic good. So when they go to a store, they think, this bread is so many ounces of gold or so many ounces of silver. Or this cow is so many ounces of gold. And so their mindset thinks of measuring everything in terms of the value based on that economic good. And then it's at the final stage of evolution. This process of the evolution of money, going from a collectible to going to a unit of account, took millennia for gold, thousands of years. Like from the first time a prehistoric man picked up a gold ingot to the moment in the 19th century when people were buying and selling stuff for gold and going to their local shops and butchers and bakers and paying in gold. That took thousands of years to happen. And so what I wanted to correct was this misunderstanding that somehow gold went from being this completely useful rock in the ground to people using it at grocery stores in prehistoric time. That is not what happened. And I wanted to explain that because Bitcoin is going through the same journey, the same evolution from being a digital collectible that is something that was valued by only a very small handful of people, the cypherpunks, who, before it had any market price, before it could be used for anything, there was a small group of people who wanted Bitcoin because, hey, this is cool. This is different. This is a form of digital scarcity, and this never existed before. I want some of it. I'm willing to actually mine for Bitcoin. I'm willing to expend my own resources, my own computational energy and the electricity that it costs to acquire Bitcoin. And then it expanded to a greater group of people, like people who are ideologically motivated by Bitcoin, libertarian types of people who thought, hey, wait a second, this is kind of cool. We can trade with each other. And so the number of people who valued it for its own sake started growing, and then eventually got a market price, and you could buy and sell Bitcoin. And so it entered that first stage of becoming a store of value, not a full store of value, not a fully established, deeply entrenched store of value like gold is, but I call it an incipient store of value, something that's growing into becoming a store of value. And for any market-based money, this stage of the evolution of money, going from being a collectible to being a deeply entrenched store of value, is the longest phase. It is the phase of the evolution of that form of money which takes the longest time, because it requires adoption from the entire population of people saying, hey, I want some of that.
For my European friends that want to buy Bitcoin with ease, check out Relay. I've been a longtime fan and happy to partner up with what I think is the best Bitcoin-only platform for Europeans. They offer a super simple, beginner-friendly app with no distractions and no shitcoins. You can do a quick one-time smash buy or set up automatic purchases when you're stacking regularly. And here's the thing that matters most. Relay is 100% self-custody. Every set you hold is yours. Your keys, your coins. If you want to get started, download the app via my link below or in the description and use code BRAM, that's BRAM, at checkout to get 10% off your fees. A huge shout out to Relay for sponsoring the show. Now let's continue.
And that process, in my mind, it has been enormously accelerated from gold, right? Bitcoin's adoption has grown by leaps and bounds over the last 17 years. Much, much faster than the adoption of gold. But on the other hand, that process could still take more decades. It could take another 2 or 3 or 4 decades, because the global adoption of Bitcoin as a store of value is still probably in the single-digit percentage points. So that's what I wanted to explain, that the caution that Bitcoin's not being used as a medium of exchange. That's because it's going through the store of value phase of the evolution of money. And merchants don't want to accept Bitcoin because not enough people hold it. Not enough people value it. So not enough customers, if you are someone who runs a business, not enough of your customers are saying, hey, I want to pay in Bitcoin. My savings are in Bitcoin, so I want to pay in Bitcoin. Can you create a payment system to accept my Bitcoin? But I absolutely assure you, Bram, that at the point at which you have global adoption of Bitcoin, where most of the global population holds some of their savings in Bitcoin, merchants all across the world will accept Bitcoin. And then it'll start feeling like a medium of exchange, because merchants will say, hey, actually a lot of my customers have Bitcoin and they want to spend their Bitcoin. I want to accept Bitcoin. I will make one final point. There is a big friction to using Bitcoin as a medium of exchange created by nation states, and that is the friction of taxation. At the moment at which you buy something with Bitcoin, most governments around the world will say, you bought that Bitcoin when it was worth less, measured in our currency, now it's worth more. The difference at the point at which you sell it is a capital gain, and we want to tax you on that capital gain. So that is a friction of using Bitcoin in commerce, because one, you have to just account for it. Imagine every time you had to buy coffee with dollars, you had to create a spreadsheet entry tracking the fact that you bought a coffee. That would be an enormous burden. And that is what exists for Bitcoin now, that and the tax itself, the fact that you get taxed on the gain on Bitcoin. So that friction actually is a barrier to Bitcoin becoming a medium of exchange. It does make it more difficult to use as a medium of exchange. And I would say that that's okay. there is a future possibility in which Bitcoin is not a medium of exchange, is just a store of value, and is still a huge success. You could call it the dominant non-sovereign store of value in the world. If Bitcoin is that, it would be a huge success, even if it's not used as a medium of exchange anywhere on earth. That is the position that gold has today. Gold is the preeminent non-sovereign, that means not controlled by any political entity, store of value in the world. And it is an enormously powerful economic good because of that. Nation states keep their savings in gold because they trust it as a store of value. That makes it a very powerful thing. The store of value role of money is the most important of all the roles, not the medium of exchange role of money, not the unit of account role of money. It is the store of value role, because it's where people keep their savings that determines global politics. It's much more important to have a money where people want to keep their savings, even if it's not spent. And I'll give you one example of this. You look at Argentina. Argentina is a country where anyone, if they want to save money, will keep it in the dollar. And when they have to spend money, they will spend their peso, not the dollar. And the thing that's important about Argentina to know is that people want to keep their savings in dollars, not pesos. And it's the currency in which savings are held that is the most powerful currency in that economy. It's not the currency in which people are looking to spend. So that's one difference I have with Jeff Booth, I would say.
Yeah. Is the fact that a lot of people still think, Bitcoin is internet funny money, or they're thinking, you should be able to buy a coffee with it, but it's not possible. Is that the greatest wealth transfer opportunity of our time, you think?
Oh, absolutely. I completely agree with that. And I say the same thing. The way I phrase it is information travels at the speed of light, but understanding does not. And so we have the information for why Bitcoin is a superior form of money. It's available to everyone. Anyone can read a book or on the economics of Bitcoin or how Bitcoin works. Yet a lot of people still have not figured out that Bitcoin is really the best savings technology that's ever existed, the best form of money that has ever existed. And so that is the asymmetry. You have the opportunity to figure this out before everyone else does and get in early. And, there have been many people who have done this along the years who recognize these properties of Bitcoin. Although interestingly, there are people who recognize these properties of Bitcoin, but then they got on the boat and then they jumped off the boat because Bitcoin went up 10x or something, and they're like, oh, that's a kind of a great win for me, and I'm out of here. So you have people who recognize it but don't fully see the big picture. They don't realize how transformative it is. They see it as kind of a quick trading opportunity. I can make 20% in 3 months. That's what I want to do. They don't see this as the beginning of a remonetization, a re-standardization of the monetary base of the world. And when you see that, the best way I've ever heard this phrased is buying Bitcoin. This was in 2011. The person who wrote this said, buying Bitcoin is like buying Manhattan for a quarter, for 25 cents. Because if Bitcoin becomes money, then having one Bitcoin is going to be enormously valuable. You'll be among the richest people on earth. So yes, it is kind of a paradox that while all this information is out there, still the percentage of people who have understood that is quite small. And I think that's true of all transformative technologies. In the beginning, it's just the kind of crazy pioneers who say, this is really a big deal, and everyone looks at them as if they have two heads. And then you get a small cohort of people who are like, actually, maybe they have something they're saying is interesting or correct. Let me look into it. And then it grows and grows and grows. And then eventually you have the laggards, the last adopters, who are like, they're forced to adopt it just because everyone around them is using it. And if they don't use it, they impoverish themselves. I still think we're in the early stages of this adoption. We haven't had that kind of rapid acceleration you see in an S-curve where it's sort of slowly increasing and then it goes up quickly and then it plateaus. We haven't had that yet. And when that happens, it's an open question. I think this process could still take another few decades for Bitcoin to get complete kind of adoption, global adoption.
If we miss this, do you think there will be another Genesis-like moment like this for our children, or is this kind of like the only opportunity that you see?
Yeah, my point of view is this, you're not going to see this again. Monetary restandardizations are things that happen maybe, you're lucky if they happen once a century. And gold was money for many, many centuries. So it's entirely possible that you will never see something like this ever again. So I wouldn't bet on something surpassing Bitcoin, because to surpass Bitcoin, you need to create something that doesn't beat it on its technological attributes. That's one of the big mistakes people make. They're like, oh, I've got this fancy new technology. You have to beat Bitcoin on its monetary attributes, because you're competing against it as money. And how do you beat it on scarcity? You can't. It is fixed supply money that is as scarce as you're ever going to get. How do you beat Bitcoin on transmissibility? I can send you Bitcoin as easily as I can send an email, basically at the speed of light. You can't. There are some maybe improvements you could make on the less important properties like divisibility, that you might have a little bit of improvement there, but they're so minor that you cannot overcome the network effect from making those improvements. So I don't see the space for something to come in and beat Bitcoin. We know what the attributes are for a good money. And when I think about those attributes, I think, how do you improve on Bitcoin on any of these attributes? There's just not room for it. There's not room for a money which improves. With gold, you could say something, right? You could say transportability or transmissibility, the ability to move value from one place to another. Gold actually has a big problem. Like, it's hard. If you want to move $1 million of gold from one side of the world to the other, it's hard and it's risky and it's costly. That's a weakness of gold. What's another weakness of gold? Verifiability. Someone gives you a gold coin. Is it a gold coin? Is it tungsten, plated in gold? You can verify it, but you need a spectrometer. You need an expensive piece of equipment to verify it. So gold has a problem with verifiability. Gold has a problem with divisibility. Like, how do we do transactions which are worth just a few pennies with each other? Gold has a problem there. You can identify these problems along the attributes that make for good money with gold. I do not see those gaps with Bitcoin. There is, one interesting argument that could be made about fungibility or privacy. These two concepts are kind of connected to each other. And the idea that you can kind of identify Bitcoin on the blockchain. And while that doesn't change the fungibility at the network level, every Bitcoin on the network level is treated the same. If I send one Bitcoin versus another one, the network's going to treat it the same. But in terms of like institutions accepting Bitcoin, they might say, hey, these Bitcoin came from Iran. I don't want you to accept them. I'm not going to allow you to transact with those Bitcoin because I can identify them on the blockchain. That's an interesting discussion. And maybe there's some room for improvement there. And maybe that's something that the Bitcoin protocol could address and developers could address. But it's not a simple answer because there are trade-offs there. If you get more privacy and fungibility, then you undermine the confidence in the scarcity in a way, because if it's not all public, if it's not all public ledger and you can see where all the Bitcoins are, it becomes a little bit less certain that there are the number of Bitcoins you think there are. So there are some competitors to Bitcoin which have more privacy, but then it's not clear what the supply is. So it's not obvious that one can actually be improved either. So my view is, yes, this is like a once in many century type event. I don't see the room to create a better form of money. Yeah, I think this is like one of those remarkable, I wrote this in my book, it's one of the few asymmetric opportunities, asymmetric bets that everyone in the world can participate in. And those come around very rarely. The kind of opportunity where anyone in the world can make a bet that could 100x in their lifetime. There's so few investment opportunities like that, and even better, I mean, there are things like angel investments where you could bet in a company that's small and becomes big, but those are illiquid. You can't sell them. You have to kind of wait till they go public. Bitcoin has the extra property that's not only asymmetric, it's liquid. Like, you can sell it if you need to at some point. If you need to travel to another country or escape, a tyrannical regime, you can take your Bitcoin, go to another place and sell it and still be able to live your life. So it has all of these properties. I think it's completely unique, and I do not think we're going to see something like this again in our lifetime.
Yeah, one thing to add on the fungibility is, I think, because Bitcoin is digital technology, there's also a lot of different things that could be built on top or for Bitcoin. We've obviously seen like coin mixers and stuff like that, illegal in some countries, not touched in other countries. And I think that is part of kind of like the bigger game theoretical aspect of Bitcoin, where, especially in the age of AI, more decentralization and also online anonymity, I think we'll see way more kind of like privacy tech and stuff like that also built on Bitcoin. But I think this is a great moment to kind of like wrap up part one of this series, right? I think we're dubbing it "There's nothing like Bitcoin, and you need it." I think we've kind of established Bitcoin as a one-time discovery in human history, a new element of absolute digital scarcity. And in the next part, we're going to unpack this S-curve of adoption that you mentioned. So kind of moving from the philosophy to the reality of Bitcoin, how it is physically kind of like unseating gold, right? In a digital world, we kind of touched upon that, why the legacy system is kind of trapped by its own rules, right? There's not really a solution for it's kind of like path dependency of fiat money towards infinite debasement. And also we'll talk more about this adoption of Bitcoin, kind of these booms and busts, these bubbles that are basically a requirement to become this asset that we've talked about. So for everyone who watched, I hope you found it valuable. Please subscribe to the channel to get notified about the next part, which is dropping in a few days. So thanks, and we'll see you on the next episode. I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, if you want to help me shine a light on the message of Bitcoin, please like this video and subscribe to stay connected. I hope to see you for the next episode.